While the world is distracted by election headlines and trade war theatrics, something much darker and much more significant is happening in the plumbing of the global financial system. Most people think the collapse comes with an explosion, a stock market crash, a bank failure. But the real shift? It's happening in complete silence. China has quietly triggered what might be the largest wealth transfer in history. We're talking about the strategic movement of nearly $5 trillion. They aren't just moving money, they are fundamentally changing what money is. They're dumping paper assets, specifically US dollars and treasuries, and they are cornering the market on the physical resources that power modern civilization. If you have a savings account, a 401k, or a wallet full of dollars, you are technically long on a currency that the world's second largest economy is actively betting against. By the end of this video, I'm going to show you the math that Wall Street is ignoring, the silver signal that proves panic is setting in, and why the next decade belongs to those who hold things, not paper. Let's dive in. To understand this play, you have to stop looking at China as just the world's factory. That is a 20-year-old narrative. Today, Beijing isn't interested in just making your toaster. They are positioning themselves to become the gatekeeper of the 21st century. They're locking down the supply chains for every critical material modern technology depends on. I'm talking about the inputs for semiconductors, electric vehicles, defense systems, and aerospace. The numbers are staggering. China already controls between 70 to 90% of global rare earth processing. Catch that distinction? They don't just mine it, they process it. Even if the US mines rare earths, we usually have to ship them to China to turn them into something usable. If you control the refined materials, you control who gets to manufacture. If you control manufacturing, you control the economy. But here's where it gets aggressive. This isn't just about business, it's a defensive move against the US dollar. For decades, China ran massive trade surpluses. They sold us goods and we paid them in dollars. They ended up sitting on a mountain of US debt. But now, they're looking at the US printing press, they're looking at inflation, and they're asking a simple question. Why hold $1 trillion in paper that is losing value when we can convert it into copper, lithium, and gold, assets that actually build the future? Every dollar China spends on physical resources is a dollar they're dumping. They're trading fiat currency for intrinsic industrial value. If you want to track these macro shifts before they hit the mainstream news, make sure you're subscribed. I spend hours digging through trade data so you don't have to. Hit that button and let's keep going. You might be thinking, okay, that's just geopolitical theory. No, it's happening in the markets right now. If you want proof, look at silver. Silver isn't just a shiny coin anymore. It is a strategic industrial metal required for solar panels, EVs, and military guidance systems. And we're seeing a massive anomaly in China that reveals exactly what I'm talking about. Recently, we've seen reports of massive premiums on silver in Chinese markets. We're talking about situations where the price of silver in Shanghai is trading significantly higher, sometimes 10% higher than the global spot price in London or New York. In a normal, efficient market, traders would instantly buy low in New York and sell high in Shanghai until the prices matched, but that arbitrage gap is persisting. Why? Because there's a shortage of physical metal. Chinese investors and the state are bypassing the paper market. In the West, for every ounce of physical silver, there might be 100 paper contracts claiming ownership. It's fractional reserve banking for metals. China has realized that if push comes to shove, those paper contracts are worthless, so they are draining the physical vaults. It got so manic that at one point, investors in a Chinese silver fund were paying premiums up to 60% over the net asset value just to get exposure. Think about that, paying $1.60 for $1 worth of silver. That is not investing, that is panic. That is a market screaming that they are terrified they won't be able to get the metal at any price in the future. While Western investors are chasing AI stocks, capital in the East is fleeing into hard assets. This is the wealth transfer in action. But China isn't the only problem facing the dollar. there's a second front opening up, and it's coming from one of America's closest allies, Japan. This is complex, so let me simplify it. Japan is the largest foreign holder of U.S. debt. They own over $1 trillion in treasuries. But Japan's currency, the yen, has been collapsing. To save their currency, the Bank of Japan has been forced to raise interest rates. This triggers the unwinding of the yen carry trade. For years, Wall Street borrowed money in Japan for free, 0% interest, and invested it in U.S. stocks and bonds. It was free money. But now, Japan's rates are rising, the yen is volatile, the math doesn't work anymore. Investors are being forced to sell U.S. assets to pay back their yen loans. Here's the nightmare scenario for the dollar. 1. China is structurally selling dollars to buy resources. 2. Japan may be forced to sell U.S. treasuries to defend the yen. And 3. Wall Street is unwinding the carry trade, pulling liquidity out of U.S. markets. These aren't isolated events. They are three massive currents all flowing in the same direction, out of the dollar. We're entering a structural down cycle for the dollar that could last 5 years or more. The financial architecture built after World War II is being challenged, not by tanks, but by economic positioning. China is betting that in the 2030s, he who holds the copper controls the grid. He who holds the lithium controls the transport. The U.S. will likely respond the only way it knows how, by printing more money to try and re-industrialize. But that just dilutes the currency even further. So, what does this mean for you? If your entire financial life is based on the assumption that the dollar remains the undisputed king and that paper assets will always outperform hard assets, you need to wake up. The rules are changing. We're moving from a financialized economy back to a physical economy. If you're holding 100% of your net worth in fiat currency or overvalued tech stocks, you are standing on a fault line. This isn't about fear-mongering, it's about recognizing a pattern. China is converting paper into power, Japan is trying to survive, and the dollar is caught in the middle. I want to know what you think. Is China's strategy of hoarding the periodic table going to work, or will the U.S. economy crush them regardless? Let me know in the comments. I read them, and I want to see your take. And listen, if you want to protect your wealth in this transition, you need information that isn't watered down. Share this video with someone who needs to see the bigger picture, and make sure you're subscribed to the channel. We're going to keep tracking this story as the Japan situation unfolds and as the metals markets heat up. We're just getting started. Thanks for watching.